Hi, my name's Anna Serin. I'm Director of Listings Development with the Canadian Securities Exchange. I'm here today joined by Arash Adnani. He's the founder of privateplacement.com, as well as the president of Blender Media. Thank you so much for joining me today, Arash.
Thanks for having me, Anna.
We had the fortune of doing this live earlier today on Instagram Live. We had some glitches, so I'm excited that we get to do this again and really get into some of the content because I'm so excited about what you've been building and working on. So why don't we just start right into it? Tell us about privateplacements.com.
Okay, privateplacements.com is a new venture. It's a new website that we created out of Blender Media. It's a website that aggregates all financings in Canada on a daily basis. So that's every financing, every day, every sector, every Canadian company. And really our purpose with this website was to empower investors. Right now, if you were to use other sources to gather all this information, you'd be going to websites like CDAR and other sites where user experience is not a priority. And you'd be wasting hours trying to gather this information, especially if you're doing it on a daily basis. So our goal was to empower investors by providing them the data and also making it very user-friendly. So the investor experience was a top priority for us, not just on desktop, but on mobile, because we know a lot of investors, maybe not right now, but in normal circumstances are on the go, whether it's at a coffee shop, in between meetings, at an airport gate. So the information accessibility was very important for us.
You know, I think that's a really important point because even though I'm in front of my computer all day long, I access a lot of my information on the markets on my phone, and there's definitely some websites that aren't aggregated properly to the mobile device. So, and I think people in general, you know, the shift of investor has gone to getting their information via their mobiles. You brought up some data. Actually, this was a few years ago. I don't know if you remember in a talk at one of our events about the amount of time people spend looking at a site or looking at information. Do you remember that data?
I know exactly what you're talking about. It was at one of your Go Public boot camps.
That's right.
And in fact, I believe it was a cannabis one. So very fitting that we're talking about it during Cannabis Week. The one data, there's a few data points that I shared on that day, and this is a few years ago now, so it's increased for sure. The one, this one always makes me laugh, is that this is straight from Google's developers blog. 66% of Google searches that were happening on mobile were happening from home. So the users were at home when they were making the search. And if you think about it, when you're at home, a computer is nearby. You could be very well making the research or making the searches from your home computer or laptop. And I'm sitting there and I'm kind of scratching my head thinking, this is bizarre. Now, while I'm reading this, I'm at the office in front of my desk with the laptop reading this on my phone. And so I think it's a habit. I think the phone is such an extension of each person, where you will use the phone to try to look up information and access data on your mobile first before you go to a laptop or a desktop computer. It's just, I think it's become habit and it's become human nature.
Well, I was actually talking about this with someone yesterday. When did the first iPhone came out? Has it been 10 years?
It's been over 10 years, I believe. Yeah.
So just over 10 years, but I think normal application, the fact that everyone has a smartphone now, it really has changed the dynamic of how we look for information, where we seek our information, you know, and the ability to have constant, you know, immediate access to information. So whether it's on Twitter, whether it's on social media, or even as news comes out. I know that when, you know, just to preface, we're having this conversation, you know, May 2020, as we've all been under lockdown for almost 8 weeks now under the COVID pandemic. And at some point, I really did remove myself from a lot of the, you know, news on television, just because one, I was finding I wasn't getting the broad information that I was seeking, as well as it was becoming very specific to each channel. I was getting obviously what was, you know, in their best interest to put out. So I've been doing a ton of reading on my phone during this process. I probably spend more time on my phone than I did when we would have a normal day at the office.
Yeah, you're absolutely right. And I think especially in our industry with investors, you're spending a lot of time on the go, like I was saying, in between meetings. And again, during normal circumstances, when you're traveling, the information and access to information on demand is so important, especially with press releases, things like that. We do, so Blender Media, we manage public company websites. And as part of that offering, we send out their press releases to their newsletter list. And the data that we look at on the analytics side, on the open rate, there's always more open rates on mobile devices than on desktop devices. So that tells us that investors are getting this information more so on the go than they are when they're at the office or at home, or even if they are at office or at home, they're still preferring to use their mobile device. So this idea of designing for a user experience that prioritizes mobile or makes it even with desktop, it's a very important thing, and it's backed up by data, and it's something that we really had as a must-have on our list when we were creating this thing, where there shouldn't be a change of experience if you're accessing the data from a large screen versus a small one.
Absolutely. And, we want to get into private placements. I'm excited about this topic. But why don't you talk a little bit about Blender Media and what platform that has been?
Sure. So Blender is a digital agency that specializes in investor relations marketing. So we do investor marketing, and the core offering is websites. So we build and manage public company websites. That's both the corporate site and the IR extension of it. And what that means is, first of all, we design it so we make sure that the company's story is being told in an engaging and effective way. Effective meaning it's consistent with how they present the company. So if they're presenting the company in a boardroom in front of investors, once those investors go on the website, the flow of information and the hierarchy information is consistent. The second component of it is updating it. So as you know, with public companies, there's such thing as timely disclosure. So anytime there's press releases, financials, any sort of filing that needs to be updated on the website, it needs to be blasted out to your subscriber list. And so we have built a content management system that helps companies stay up to speed. We also have a help desk that allows companies to just send us their updates and we take care of it for them. So that's really the business. And we started this in 2005. We've worked with hundreds and hundreds of companies. We currently have just over 200 active websites that we manage. And the market cap of companies and clients that we have range from $10 million to $12 billion, all sectors, from shipping to mining to cannabis to psychedelics, you name it. And so privateplacements.com, when we started it, it was really at a place of recognizing there was a need. There was a need for it. And the need came from our understanding of how the small cap investor thinks and how they look at opportunities. So with small cap opportunities, as you know, a lot of small cap companies are not generating any revenue yet. And so that means they're going out to market to raise money frequently. And so one thing that investors look at is the management team's ability to raise capital. And so, we've always said that the four things that you look at when you're looking at a company is management team, quality of the project, a healthy cap structure, and access to capital. And so with privateplacements.com, our goal was to shed a light and become the main source for that flow of capital and how companies are accessing it. So I can give you a breakdown of how the website does that. The website is built up of 6 main elements. The main one is our database of financings. So these are financings that are being added to the website on a daily basis. Again, financing by every Canadian listed company on every exchange. And we track both announced and closed financings. So when you go onto the financings page on the website, you can organize by date. You can actually get pretty granular. You can look at it by exchange. So you can just look at CSE listed companies. You can look at it by sector. You can look at it based on whether it's brokered or non-brokered, on the agent, if it is brokered. you can get pretty deep on your analysis. So that's number one. Number two, we write articles. These are daily articles we write on what we think is the most important or interesting news of the day. These are editorial articles, so we're not being paid to write these articles. We also do interviews with thought leaders, CEOs, top investors. We do sector reports. These are monthly reports that give you a monthly snapshot on all financing activities for that specific sector. So we started out with gold just because gold has been by far the most active, but we're going to be adding other sectors to that. We have, this is my favorite, a warrant expiry calendar. We'll talk about maybe what the significance of warrants are, but this calendar shows you all the upcoming expiring warrants, which if you're a seasoned investor, you will find very beneficial. And last but not least, we've created a watch list feature. So when you set up an account, you can add companies to your watch list and you'll be notified same day when those companies are raising money, if their stocks in the money after the restrictions been lifted, if they have warrants. Again, it's very robust as far as the amount of data that you can get from the website.
That's amazing. And, if people haven't gone and done their due diligence on their own, they might not know this, but it is incredibly difficult to gather all that information. If you're interested as an investor, even in one particular company, to gather that information by going to CDAR and the company's website and varying, portals that will provide you with all that information is incredibly hard to find, especially, how would you know if a company is going to start a financing? So you're kind of collecting a bunch of data that is incredibly important if you want to invest, in small and mid-cap space, and you kind of have all financings that are happening, which also gives an investor, the information based on what's happening across the board, which I think is always helpful when you're making those decisions. Why don't we get into a little bit what is a private placement? Obviously, it is a unique form of raising capital that's different than a prospectus raise. So let's talk about what a private placement is first.
Sure. So private placement is by far the cheapest and most efficient way for a public company to raise money. It's a form of financing. It allows investors to participate. Now that's accredited investors that can participate in these private placements. An accredited investor is an individual that has an earning of $200,000 or $300,000 combined with their spouse. They have financial assets of $1 million or net assets of $5 million. So it's basically, you don't need all, you just need one of these to qualify. Once you've qualified, you're able to participate in a, I just lost you here. There we go. Sorry, I had a notification on my, if you are an accredited and if you qualify as one, then you're able to participate in a private placement. Now, there are a lot of benefits in participating in the private placement. There are investors out there that are just private placement investors. It's their kind of trick of the game. But the main reasons why, as an investor, it's important to consider if you qualify as one. First and foremost, you're buying shares directly from the company, from the issuer. So you're not buying it in a secondary market from another investor, which is what happens when you're buying shares in the open market. You're buying directly from the issuer, which means your money goes directly in their balance sheet, which they can then deploy towards whatever the use of capital may be. So that's first and foremost. I said a private placement is efficient. It's also very efficient for the investor because it allows you to purchase large blocks of shares in one transaction. So if you were to buy 100,000 shares of the company, to do that on the open market can be somewhat tedious if the company is not very liquid. This way, it's one shot, you cut a check and you become the owner of those shares. Number two, you get a discount to market, which is also very important if you're buying in bulk. The most important and the most exciting, that is really the reason why a lot of investors like private placements, are the warrants. Now, not every private placement will have a warrant, but a lot of them do. And a warrant presents the investor with an option to purchase more shares at a fixed rate. Now, we'll have an expiry date on it. It could be anywhere from a year to 5 years. But the benefit of that is, and maybe I can just explain how that works. So let's say you're buying shares at $1 you'll be given the option to buy more shares at $1.50, let's say, for a period of, let's call it 2 years. And so no matter what price the share is trading at, for 2 years, you can exercise your warrants at $1.50. Let's say the company you invested in is trading at $2, you can still exercise at $1.50. So what that means is that if you've made the right decision and you've made the right investment in the company, you're being rewarded twice. The warrants are just kind of the cherry on top, which really, if you've done well, is a hell of a way to be incentivized for your investment.
Well, and I think that's a really not a lot of people know about sweeteners, and typically sweeteners they can come in a variety of ways. There's options, warrants, rights, and the sweeteners are typically there. The benefit to the company, if you believe in that company, you believe that it'll execute on its business plan, and the market will reward it, is that it also, when you exercise those warrants, should that happen, you're funding the company a second time.
Like a
So if
second financing, yeah.
yeah. So if you invest in the company, and then you decide to purchase more of the company and continue to build your position within the company, you're actually funding directly to the company a second time, which is of course always valuable to the company. And I think some people actually aren't necessarily aware that when you are buying on a secondary market, that money is going to the seller, not to the company. And as both you and I know, in the small and mid cap space, these companies, they require capital to survive and to grow. So especially in the mining sector, there is no revenues in those companies, and for them to complete their next drill program, and keep their corporate governance going, they need to raise capital to stay alive. And as a shareholder, if you really do believe in the management team and in the company, you should be making a long-term investment and continuing to support them, if you believe that they're able to execute. So it really is a unique opportunity. And typically, I think in the past, people were only aware of private placements, whether it be through their financial advisor or if they were, watching a company closely. So this really does provide us with that access. The other stipulation in the accredited investor is the family and friends, and I do want to bring that up,
Yeah.
because I think sometimes people might be feel that they can use that, but it really is for family and friends. You have to be of close relation to a director or officer in the company, and the BCSC they do track that. So be cautious if somebody says that you're able to just tick that box if you don't really know the person. And I think it's maybe something that hopefully our regulators will review, because I think there should be opportunity to everyone, not just of a certain, estimate of your own personal wealth. But it really is implemented to protect shareholders from something that might be considered more speculative. Why don't we get into a little bit of, obviously the amazing thing, other than I love this website and I think it brings so much value to investors, is you have access to this amazing data. So why don't you tell us a little bit about some of the trends you're seeing?
Sure. Yeah. Well, I did pull up some data on cannabis, because I know we're in. This is the cannabis week that CSC is doing. So, and I thought this was really interesting. So, year to date, and that's for this year to date, there was $1.5 billion in closed financings for cannabis, the cannabis sector. Okay, so that's 1.5 billion. Compared that to last year for the same time period, last year was $2.7 billion.
That's an amazing number.
It's amazing, and it makes sense because cannabis has cooled off significantly. Now, what I found was really interesting is the number of deals that made up those two numbers was almost identical. We had 135 this year versus 134 last year.
No way. And
So
this is all the timing that you're talking about. Again, just to preface, you're talking about the first 4 months of the year, where we have essentially been under lockdown for more than half of that. So people are sitting at their homes and they're still participating in, these financings.
I think what this tells you is that, especially for cannabis, there's still a lot of interest, but the valuations have dropped off. So the dollar figures are going to drop off. But the fact that it's the same number of deals is actually quite promising, I think.
100%. And, I mean, I think we all had this question when this all first happened. You, yourself and myself have, personally been through probably two of these downturns now. And so you're just prepared for, how is this going to look and how is this going to affect us in the long term? We're all entrepreneurs and we're all trying to stay alive through some of these big downturns. And I think it was surprising to all of us to see that it didn't affect us the way that we thought it would. I mean, at the exchange, we're incredibly busy. We're run off our feet. We're loving all of the connections that we have and still have files coming through the door, as we speak on a daily basis. And I know you mentioned that with Blender that you've been incredibly busy, which is great to hear that people are active, engaging with their investors and stakeholders. But I don't think we saw this happening.
I agree. I think March was a month where everyone was in shock, and so March was a slow month. It was incredibly slow for us. Uh, April, it really took off, and May the same thing. I think once everyone saw that, okay, it's going to be business as usual because we're going to be in quarantine for a while, and they also saw that you can utilize platforms like Zoom and other resources to keep business going as usual. Uh, we haven't really missed a beat with the exception of March. Now, there is also, I think, from a standpoint of investor sentiment, potentially a greed factor at play here, because I think a lot of people are really banking on a V-shaped recovery, and we're seeing that in the US. In Canada, we're seeing a real gold rush uh, towards gold financings, and for obvious reasons, because there's so much stimulus and there's going to be more stimulus. Trudeau announced last Friday that they're thinking about extending the payroll subsidy, where they cover 75% of businesses' payrolls. That's a lot of money, and so I think investors are realizing that, okay, well, the feds are going to keep things going now, whether that's healthy or not. They're going to keep things going and they're going to keep supporting it. And I think a lot of investors also remember 2008. It hasn't been that much time hasn't passed. Okay, so a lot of us were around in 2008, and a lot of people saw that the investors that made those bold moves and made those really brave, courageous investments, buying cheap stocks, I mean, they made a wealth. They created wealth based on those decisions. And so people don't want to miss the boat. People know that this is another opportunity. And I'll give you an example. One of the CEOs that we interviewed was Chris Taylor with Great Bear Resources. It's a gold exploration company. And, when we talked to them, this was March 24th, they were trading at $6. And yesterday they announced a $33 million financing at $13 a share.
It's amazing.
Right? I mean, it goes to show you that the demand is still there. Now, I think there's a separation between the really good companies versus the companies that just aren't as good or as well managed. But these are all opportunities, and I think investors that see that are in the markets. And we saw this was from the Q1 reports from some of the discount brokerages such as Robinhood and TD Ameritrade, Charles Schwab, and there was as high as 170% growth in new accounts. Now, there's a lot of different explanations. Millennials are getting into investing. People are bored, so they're getting into the market. But whatever it is, we're seeing that people are there and they're investing. And I think it's a great opportunity for companies that have a very clear, defined vision for what it is they're trying to do and how they want to deploy the capital that they're raising. And we're seeing it. We're seeing it in the market.
Well, and I think one thing that's important about that number from those discount brokerages is one thing to be clear on is the discount brokerage account is not a normal bank account. You can only invest in capital markets through those accounts. So what that's saying is an increase of 170% of capital has flowed to the capital markets. There's no other use of those funds.
All new funds, yeah.
So that's going into the markets, wherever it's coming from and whatever the reason being. I think the other thing, it was interesting to watch this all play out, because I would say 2014 was really the beginning of the cannabis sector. I chuckle when you said it's Cannabis Week with the CSE, and it's our week number 2, but over the past few years, it's always been Cannabis Week around us. And don't get me wrong, I mean, we have some amazing other sectors and amazing other companies. Cannabis doesn't even make up, a quarter of our exchange. But the one thing is we really finally saw the next generation come to the market, or we saw new investors, whatever age, come to the market because cannabis was sexy. Cannabis was something that they understood and they were interested in doing it. And I think the one thing, because this is so fresh in everyone's minds, and we've forgotten already because we're under this, current economic state, is that right before this all happened, cannabis really was seeing a correction. I mean, there was a legit 3-month, 4-month correction that was happening on companies. I think there was some real value there was some companies that probably required a bit of a correction. They didn't have the fundamentals that necessarily matched what their market capitalization was. So I think it was a bit of a needed shakeout. And people were seeing that as an opportunity, and they don't want to get in late because they feel like the last time they got in late. So I think we're seeing, one thing that's been amazing to watch over the past few years is the retail market is amazing. I mean, it's stories that we grew up with in the 80s, but the retail market has a real voice in capital markets. And it wasn't that long ago that the institutional side of things and the banks, they decided where everything went, whereas the retail market has a real voice right now. And that is really important to people like you and myself, because the retail market loves the small mid-cap space, right?
Absolutely, yeah. I think it's exciting for them, especially when you're talking about new industries. Not that cannabis is a new industry, but it is to the capital markets. It's still in its infant stages. Or when we had that period of time where cryptos and blockchain were really trending, and now you're hearing about psychedelics. So these are the things that I think make the venture space so exciting. And I think for us as business owners and entrepreneurs, there's even a greater sense of appreciation of what a lot of these companies are trying to do. And I think if you can be part of that growth and you get to benefit from it by the shareholder value that they've created, it's really an incredible feeling.
Well, on that note, let's talk about other sectors. So
Yeah.
obviously you got your stats from the cannabis space. I know that you've always been, heavily involved with the mining sector. Since day one, it was probably your first clients in 2005.
It
I
was.
will go back to Blender Media for a second. I think people need to understand this as well. As far as social media and web development and content for public companies, they are required for a certain amount of dissemination and disclosure of information. So, websites need to be up to date. News releases need to go out in a timely fashion. That information is all available to investors, and that people such as yourselves are allowing these companies to make sure that they're kind of abiding by their corporate governance rules that are set out by regulators. So, it's incredibly important. But what that is for an investor is it's always available. If the company is, abiding by rules and regulations, then they're providing that in a timely manner. But going back to private placements, what kind of data are you seeing in other sectors? Is there any other sector you're seeing, a surge in financings?
Well, obviously it's all about gold right now. The amount of financings in gold has been incredible. Silver is right behind. So we're seeing gold and silver making huge moves. I do have some numbers here that I can share with you. First of all, for gold, again, year to date, so Jan 1st to May 12th, we had for this year $2.2 billion. That's for gold. Same period last year, 1.9. Number of deals, 329 last year, 361 this year. We're seeing major uptick in gold. We're starting to see other sectors waking up. Obviously, at the beginning stages of this whole COVID-19 crisis, there was a lot of these kind of what we were calling COVID pivots, companies that were somehow pivoting towards either creating masks or working towards vaccines, and they were able to use that as a way to attract a lot of attention, create a lot of volume, and turn that into financings at higher valuations. That's died off now, but there are other companies that were more so on the front line doing real things
Yeah.
during the COVID crisis. One of them being Well Health Technologies that launched their virtual clinic service literally 2 weeks after the shutdown began. This is something that they were working on from before, and they've seen unbelievable value being created. So there's a lot of these great stories and deals that have really, I don't want to say benefited, but it's been a kind of a perfect storm of timing of what's happening right now, combined with where they are as a business. And it's really allowed them to springboard into a much higher valuation for their companies. Other sectors that we're tracking. This one, I scratched my head when I saw this one, and I'll share it with you. This was for oil and gas. Again, same date period. This year, 3.7 billion. Last year, 1.4. This one didn't make sense to me, and I'd like to look into that to see if there was a couple of big ones this year that really influenced those numbers. But again, sometimes with everything you hear in the news and the headlines you see, it doesn't always tell the full story. And that's really one of the reasons why I love looking at the markets through the lens of flow of capital, because to me, it's really a better way of understanding what's financeable and what sectors are hot from a metric of attracting investor money. And so when you look at these things, it's quite interesting, I think.
Well, and I think that's a really good takeaway is look at the data, look at the flow of capital and where it's going, because that's what's actually happening. I heard, I was listening to a podcast the other day and somebody made a really intriguing point that I've thought about a little bit is, when you watch the news, it's not so much the news that they're telling you, it's the news that they've chosen to leave out, and I think that is, I think, a really interesting concept when you're looking at the information that's being provided to you. It's not so much the information being provided, it's what hasn't been provided. And you can't ignore, when you're looking at privateplacements.com, but for example, this is all the financings that are happening. This is the sector that they're happening in, that's just the way it is, right? So I think it's important for people to start sourcing out information in a more, data oriented way, because it'll give them the real story of what's happening. I think sectors, the oil and gas one is really interesting, and I think we've all been trying to figure out what's going to happen with oil and gas. That has taken an interesting turn, but there will be a point where the world will turn its lights back on, and these people that are probably, as you mentioned before, don't want to miss out on the opportunity. They might be getting in at some amazing valuations and might be creating some big wealth from it. Who knows?
I think energy is going to be really interesting to watch, because I saw earlier today that the Norwegian sovereign fund basically announced that they're either selling or going to be selling any fossil fuel energy positions that they have, and that's massive news, because that's one of the bigger funds. Yeah. So there, we saw a big move in uranium, which is obviously part of the energy equation. That was more so due to the fact that there was a wide spread of shutdowns of mines from Cigar Lake to all over the world, and so that caused a bit of a life in the sector. But like you said, energy is energy. You're not going to be able to do without it. So at some point, one of these subsectors in energy will lead the way. And right now, perhaps this is a good time to look at some of these companies and some of these discounts that you could really have as an investor.
Absolutely. A few of the things I want to chat about before we end off is some of the extra features that are within privateplacements.com. And I do want to preface, privateplacements.com I think is a really great place if you're new to investing or seasoned to investing, and it's just a great place to locate a bunch of important data. If you're new to investing, it's a great place to start accessing this information, start digesting it, figuring out what it means for your investment. one of the features that you have on there is use of proceeds. So before you talk about that and the data that you've seen of it, tell us what use of proceeds are.
Well, use of proceeds is really important. It tells you what the money that's being raised is going to be put towards. The information is shared in the filing. So we extract it from there and include it in the term sheet page of the website. The reason why it's important is because if you're investing in a company and you're providing them capital directly, you want to know what that money is being deployed for. And there's usually, the way we look at it, two types of financings. There's survival capital and there's growth capital. Survival capital could literally be to keep the lights on and keep paying salaries. Growth capital could be put towards M&A activity or actual product expansion or development, like a drill program. And so we provide that information on the website. It's very short, so it's literally just a line that we pull from the press release. However, it's enough for the investor to consider and to do further research on. If you ask a company about use of proceeds and they're not able to give you a well thought out plan on what the plan is, that's a sign that you should probably walk away, and that's not a good deal or worth your while. You want to know what the capital is being used for. That's very important. And that's just one of the things that we cover and mention in the report.
Well, and I think, a company shouldn't be raising capital if they don't know what the use is for. We did see that a little bit in the cannabis space. I think there were some companies that they just had the ability to raise capital, so they did. And unfortunately, it did blow out some of the, capital structure of some of these companies, and maybe they felt that the ability to raise capital would be endless, and it wasn't. So, we all learn our lessons there. But these are all important pieces of information as you're making that decision.
Yeah. I think sometimes it is smart for companies to take advantage of a good market to raise money. Listen, I mean, I don't know if this is true or not. Shopify raised $1.8 billion last Friday. This was 2 days after they became the largest company in Canada, beating out RBC. I find it surprising that 2 days later they announced a 1.8 billion. I think for a fact one of the reasons that led to that was realizing that no time better than the present to take advantage of this valuation and bring in some extra funds. So I think you'll see big companies, small companies do this, and it's not a bad thing. And I want to also add, there's nothing wrong with survival capital. Sometimes a company, because of the sector they're in, they might just be in a hard spot. So it's not to say that it's a red flag, but I think by speaking to the management team and just understanding what the plan is, they might be able to shed some more light on upcoming milestones and things like that. Sometimes those survival capital ones might actually be the best ones because that's where you're getting the best deal. And so really the idea here is to use this data as a starting point for other and more in-depth due diligence that you do. And this really just becomes a quick way to sort which companies you want to do that with.
Yeah, and I think you brought up a good point there. I mean, people might not understand the full cost for companies to be public. I've talked to many a CEO of public companies, and they said as soon as they went public, they had two businesses. They had their operations and they had their public company operations. And the public company operations has its own costs attached to it. And sometimes, that working capital to keep the lights on is really there to, as long as it's being used with, with discretion and caution, it's there to keep the company going, and keeping the company going is keeping the value for the shareholder. So yeah, I think you brought up a good takeaway there. Talk to the company, find out what they're using it for, what their plan is. A lot of the time they're going, hey, this is what we need to do to keep it going. Once we get this sorted, then we can go out and do a raise for the next gross, and it repositions you. The other function that you have in there is a function around the warrant calendar, which you brought up earlier. Why don't you talk about why that's valuable to an investor?
Right. So the warrant calendar, what it does is it shows you all the upcoming expiring warrants. And the reason why that's important is because if a warrant is in the money, meaning the exercise price is lower than the market price, then chances are those warrants will be exercised, the majority of them. If they're being exercised, there's also a very high likelihood that they're going to be sold. So investors are looking at that opportunity as a good excuse to take some money off the table. If that happens, there's going to be some selling pressure on the stock. Okay. And so if there's selling pressure on the stock price will drop, not a lot, but a little bit, depending on how strong the market is. So that presents a great opportunity, a great buying opportunity on the open market for investors that are following certain stocks that maybe they didn't get in on a private placement, but they're looking for a buying opportunity. So that's a highly important piece of information to have if you're following the market, is to kind of understand these ebbs and flows and these different events that happen and how they affect the stock and the market of a company.
Absolutely. I happened to ask you this by accident during our live, so I'm going to ask again because I think it's great to know that it might be coming. But one thing that is another feature of a private placement is the fact that all private placements, should you subscribe to, is once you're issued the stock, it does have a 4-month hold on it. And typically, the reason that this was implemented by regulators is that you're typically getting the stock at a discounted, price to market. So they don't want you to have the ability to go out the next day and push it back out to the market. We want the company to be able to maintain that share price as well as the sweetener. So we want people to remain shareholders and, in a bit of a longer term, let the market settle out. So with that 4-month hold, though, it also will tell an investor some important information about a financing that's been done. There'll be a lot of holders at a certain price that have to hold on to it for a certain period of time. And you had mentioned that this might be an upcoming feature with privateplacement.com.
It's not a maybe. It's definitely happening. It's in the plans. We were actually reviewing the working functionality over the weekend. So it's happening. I don't have a date yet, but I think it's safe to say sometime next month it'll be available to investors. I think, again, that's the same thing as same value as the warrant calendar, and what that provides is understanding upcoming selling pressure on the company. Or if you're actually participating in the financing, is a good way to stay reminded of when your shares become free trading. Believe it or not, a lot of investors don't. It's hilarious. You would think that's something that's tracked, but a lot of investors forget. And so I think having all that consolidated in one place on privateplacements.com using your account is a huge value add for investors.
Absolutely. And just to clarify, when you go to your site, if I look at a company that is doing a private placement, I don't actually subscribe on that placement through privateplacements.com. What do I do if I want to participate?
If you see a term sheet and you're interested, you have to contact the company directly. Now, I mean, first of all, you should do your due diligence before you make a decision, but the website right now is just offering the data. Once you want to take further action, then you need to do that directly with the company. Obviously, it makes a lot of sense to have the functionality to be able to do that from the website, and it's something that we are looking at, and I hope it's something that we can provide in the near future. But as of right now, when you see a deal that you like, there's a link to the company website right there, so you can click on it and contact them. And right now, a lot of IR professionals are sitting around at home just like me and you, and I'm sure it'd be a lot easier getting a hold of them.
Absolutely. And, that's another good point. When you're reaching out to a company, you should be able to get a hold of somebody if you're an investor, and maybe give them one moment to get back to you, or send them an email because they're probably busy right now, but they should be answering your calls and your queries.
It's so important. And I think, me and you and other people in the industry take it for granted because we are in touch with issuers and management teams on a daily basis. We see them at conferences. And so we take for granted how valuable that access is. And so for the investors who don't have the luxury to travel to these conferences, to spend time speaking to CEOs, CFOs, IROs, do that by phone. And now that Zoom is such a common practice, ask them for a Zoom call, get to know them better. I think at the end of the day, you are investing in people. And so getting comfortable with who the people are and allowing them to share the vision and the story of the company is highly important.
Well, and our tagline is we're the exchange for entrepreneurs, and I got to say the CEOs that I've met at most of our companies, they're amazing people. I mean, they're innovative, they're hardworking. I think based on what we're going through right now as an economy and society as a whole, we're going to see some companies really suffer from this, and the entrepreneurial spirit is going to become more important than it ever has been for us to all survive it. And I think you're exactly right. Talk to them because they're amazing people. They're doing this for a reason, and they're good at it for a reason. So I think it's important to remember as a shareholder you can reach out to them. But I want to say thank you so much for kind of the work that you've created. You're based out of Vancouver alongside myself. I've known you a long time. I love what you've done with Blender. I love privateplacements.com.
Thank you.
Just a reminder, the website's actually privateplacements.com. And if you wanted to register and get an account, then you can create your own watch list. And I would definitely make it as part of your due diligence process if you're looking at the markets in any way, shape, or form. Arash, could I convince you to do this with me again, maybe in a few weeks or a month, because the data collection that you have is amazing. I always love hearing what you're seeing from your side.
I would love to. And for our next call, just let me know what data you're interested in, because we literally have all the data, and we can look up all sorts of different queries and different looks depending on sector and really anything you'd be interested in. So would love to come back, and I think it's great what you guys are doing with this show, allowing people to come on and share their stories and what they're working on. And thanks for having me on. It's appreciated.
Thank you, Arash. We'll talk very soon.
Thanks, Anna.